right, let's get on with the show. I don't know if I said it, but I'm Greg Owen, the CEO of the GOKO Group, but I'm sure most of you know that. Okay, let me just tell you about Phil Anderson. Look, I first came across Phil Anderson when he did a debate with Harry Dent maybe 4 or 5 years ago. Phil is one of the most respected analysts, and also he had a huge following in the Port Phillip Publishing Group down there in Melbourne, a massive following, and he and Harry had a debate. A huge crowd turned up for that debate, because then I realised that obviously Phil Anderson is somebody special. And sure enough, you know, he's an authority on real estate, the share market, but especially the real estate market, because what he had to say that day to Harry when they had a debate really resonated with me, that this guy knew what he was talking about. And we're going to talk more about that in the minute. And especially he talked about his 18.6 year cycle, which we'll talk about just in a moment. But Phil, thanks for joining us this morning.
You're welcome.
Phil, just to kick the show off, you know, you are famously known for this 18.6 year cycle, and which obviously helps us look at real estate prices over the past 20, 30 years. It talks about real estate prices now, and also talks about real estate prices going forward. And of course, we've had all sorts of analysts tell us what they think of real estate. I've had people on my program telling me since 2011 that the real estate market was going to implode in Australia, but it hasn't done that yet. It just keeps on keeping on. We're in very interesting times with COVID-19. Who knows how that's going to play out? Everybody's trying to look into their crystal ball and find out how this may affect everything. But of course, you have been strong. You've stayed by your system. You've stayed by your research. You've stayed by your cycle. Can you maybe give our listeners, what is this cycle? What's so special about what you do, and why have you been so right?
Greg, it's pretty simple. The economy has a structure, and it's all based around the enclosure of the economic rent. It goes back to the days of David Ricardo in 1810. I'll be brief when I talk about that, because that's way too back really. But David Ricardo made himself famous for the theory of comparative advantage. It just means that nations, if they're specialists in producing something, they should stay that specialist and then manufacture and make as much as possible, sell it overseas, and then buy in what they can't make themselves. When nations do that, they make themselves much wealthier than trying to produce everything themselves. Ricardo proved that. He then went on to study the theory of rents, and he came up with what he called how rent gets enclosed. It produces what he called a margin, and from there you get a system of economics that we see today. He also noted that the rents have behind them a very large vested interest. These vested interests are very significant rent collectors around the world. They're in the pocket of government. They run government, really. And Ricardo's theory of rent was quite deliberately written out of the economic textbooks around about early 1900s, 1910 or so, when there was a very large land reform movement that swept right around the world. First World War came along, and after that we all forgot. John Maynard Keynes come along after the terrible depression of the 1930s, and he said that government can spend its way out of recessions. So that's what we've been doing ever since. But no matter what happens, if you always go back to Ricardo's economic rent stuff, you'll know that and Winston Churchill was another big proponent of rents and what it meant. You'll know that every time society introduces a new benefit, or every time governments or the reserve banks these days attempt to pump up the markets with more spending, more money, more printing, Ricardo showed quite conclusively that every time that happens, the benefit will be taken by land price. So the more we spend, the more we develop, the more we create, the more we invent, it must push up land prices. Now, this all gets back to, in the finish, earnings. And of course, today I'd like to keep this fairly simple. It does all get back to earnings and interest rates. When interest rates go lower, property prices must go up. So that's the general economic rent story. It's a bit like economic rent is to economics what gravity is to science. We all know about what gravity means and stuff. We all know it's science. We all know, you can see a pencil here. If I was to drop this pencil, it's going to hit the floor. That's because we know science works. Well, it is the same in economics. It's the theory of economic rent, and rent takes the gains, except that because there's vested interest behind it. If there was a vested interest in gravity, we'd not have heard of gravity yet. So that's the theory side. That's the economic rent side. I read a book back in 1991 called The Power in the Land, written by Fred Harrison, which forecast 7 years in advance the recession that the world had then in 1991. Fred wrote the book in 1983. That mightily impressed me because it was happening right at the time when I was reading it. So I decided that if I could build on what Harrison had to say, and I could work out how that worked, I could then apply that theory into markets, stocks, real estate and things. I wouldn't have to work for the rest of my life. As it turned out, Harrison was right. I went on to write a book. The book's called The Secret Life of Real Estate and Banking, which I know you've seen and heard about. And since then, in that book and what Harrison had to say and myself, Harrison studied the UK market. I went on and studied the US market. When I looked at all the US statistics, real estate, banking, interest rates, everything else, I discovered there was a very clear 18 to 20 year cycle in the United States real estate prices. And every 18 to 20 years, and that's been a fact since 1800, the United States has seen a significant downturn where property prices collapse. And when that happens, everybody panics and you get a recession and or depression. The recession, how low the recession goes depends on how much money printing takes place in the few years before it. And so here we are today where, I wrote my book come out in 2007, 2008, forecast the real estate would collapse into 2008, 2010. It also forecast that we get another recovery again and we go on to bigger and better things. I said that governments would print ever increasing quantities of money, and we just get another big huge boom after the bust. And 18-year cycle, 18.6. I've worked it out at 14 years up, 4 down. Since the Second World War, since 1955 in the United States, it's quite hard to believe, quite impressively. That's been almost exact. 14 years up, 4 down. Real estate in the United States bottomed in 2012. The stats there on that are pretty clear too. Greg, it's just pretty simple. It's so simple nobody believes it. And as you know, you've seen on my past work, I spoke with, the old Port Phillip, they put out my stuff. I had a big talk with Dan Denning in 2013. I said in 2013, Dan, I looked him, Dan and I were talking, I looked him straight in the face. I said, Dan, US markets in 2013 is at all-time new highs. This is very early in the cycle. When US stock markets go into all-time new highs early in the cycle, it forecasts an absolutely dramatic upswing, which will run 14 years from 2012. That's on my YouTube channel. You can see it. Everybody can read that, see that for themselves. It's all there, black and white. And here we are, halfway through.
Bill, you are the only one saying that. You're now saying to me that real estate in Australia, and I assume this mirrors around the world, or we copy them. You're talking London, you're talking America.
Yes.
Now, right at the moment, real estate in some parts of Australia is still white hot.
Yes.
Yes. I read the other day in some parts of America, properties doubled in 3 or 4 years.
Yes. Yes. Well, Greg, it has to happen that way. It's just simple. It's just simple mathematics. First up, I hate to say this in many ways, but what happens in Australia really doesn't, in terms of the world stuff, what happens in Australia really doesn't matter that much. It's America that people want to follow. Except, of course, as an Australian investor, you do have to understand the regional variations, the regional statistics of where you are, obviously. So you always have to take account of that. But when I'm talking about cyclical stuff, the way the cycle works, America leads, the US leads into and out of. It's America you have to watch. So that's where it all happens. And Australians are very fortunate in that respect, because Australia just operates about a year behind the US. So if you look at what's happening in the US, that's what Australia just follows that 12 months later, historically. So always watch the US. I've been lucky enough to take significant advantage of all the knowledge I've built. Greg, I retired years ago. I just do what I do now for fun and stuff and watch what's happening. Let me give you just a couple of minute scenario. It's not theoretical, what I'm about to say. It's just a sort of like a small personal example. I've got places all around the world. I've lived in Melbourne for a long time, but not any longer. I have a nice house in 2 houses in France. Got a couple of places in London. The one place in London, which I bought with a mate of mine, doing some investment stuff. I won't give you the exact details, but I'll just demonstrate for you exactly why property prices had to, and will continue to go up. And it's just simple, straight interest rate and mathematics. I bought the place in East London. I paid a couple of £100,000 for it in cash, because you just couldn't get a loan back in those days. Property price from 2012, 2013, it's up practically 100% in the UK. What you do is then, because you own the property and stuff, we ended up took out a mortgage on it. Because prices went up, you can refinance that mortgage. So because we've just refinanced that mortgage, the rent received on that, just for sake of a figure, the rent received on that's say about I don't know, 900 quid or so. The interest we were paying on that a couple of years back was 700 quid. Now we've refinanced with lower interest rates. We're now paying 400 quid. When that's the case, the property price must rise. There's just no other way for it to go. And so it does. So, everybody's refinancing now because interest rates have gone lower, because the Fed have wanted to save us all from a perceived another recession. All it has to do, it has to drive asset prices up. And, Greg, as I said, some years ago, as you know, when you study, and, I urge people, my book, it's only going to cost you 20 quid. It's the best investment you'll ever make. I show in that book the past 11 cycles going back to 1800. I show, you can see clearly, each cycle has been bigger than the one before it. And this cycle it's followed the script exactly. This cycle is now bigger than the one before it, the US cycle. Now we've got the rest of the world in it. We've got China. We've got China now will be almost as big as the US. So if you want to see that history and see how it all develops, once you study the history, you'll see how it goes forward. Just read the book, The Secret Life of Real Estate and Banking. It's widely available on Amazon or from the publisher Shepherd Baldwin. Every cycle has been bigger than the one before it. This one is no exception.
Well, Phil, this is fantastic stuff. Now, look, let me see.
Nobody believes it, Greg, half the time. When I put, sometimes I put out a couple of posts on Twitter, or I put it out on Facebook and other things. That Greg, the shit I get back from people saying what an idiot I am, and just another crystal ball stargazer and blah blah this and that.
No, I'm listening to you because I know 4 years ago you had every top economist saying that the market was on the verge of collapsing, and you dug your heels in and said no. Now,
yes.
For everybody watching, this is important. And by the way, what's the name of that book again? Give it to me nice and slow. People want to write this down.
Yeah, The Secret Life of Real Estate and Banking.
Okay, The Secret Life of Real Estate and Banking. All right. So according to what you're saying that real estate in Australia will continue to boom until 2026, 2027. Is that correct?
I'm suggesting that history will repeat, and the low in the United States was 2012. History shows the 11 prior cycles, it's 14 years up, 4 down. Very simple calculation. That'll take you right through to 2026. There's no caveat on that. That as plain as I sit here, Greg, that is going to happen. Because I study causes, and we enclose the economic rent. It capitalises into a price. We must get a cycle. The only question remains after that: why has it been so remarkably consistent at 14 years up, 4 down? The 14 years will take us to 2026. I've been saying that, Greg. I've been saying that since about the late 1990s. If you scale that out, if you've seen my early work, right? 14 years up, 4 down. We have to. I can't say categorically that after 2026 we might get some catastrophic downturn. The downturn will depend on how much credit gets created, how low interest rates go, how high asset prices go, and how much speculation the governments and reserve banks around the world allow. Now, by all reasonable considerations at the moment, there's a lot of credit being created. There's enormous, more debt than I thought was actually even possible has now been created. So that tells you that we're on the upswing, and it could be seriously big. If we do get into 2026, and you're seeing the usual stuff happen, which is the opening of the tallest building. If somebody steps up, I don't know, let's say Trump's back in the White House and he decides to cut taxes again, and then again give himself all the bonuses and everything else that he can imagine to all his cronies and mates, it'll just be prodigious.
Wow. All right, based on that, I've got a couple of questions, because what you've said to me is groundbreaking. It's breaking news to think that this can continue for another 4 years. So let me...
Oh, more, 5 or 6 probably. It could run, we're going to go so big, it just could run as far as possible, 2027 perhaps even, where governments just try to do absolutely everything to just keep prices high. But in the finish, there'll be an event somewhere, somehow, Greg, as we've discussed before, there'll be some sort of event take place. I've got no idea what the event will be. Nobody will forecast it, least of all me. I just know that when we get into the realms of having had 14 years up, when we get into that sort of realm, we can expect some sort of event to take place. It'll just be a normal event, most likely, but property prices will have gone so high, and there'll have been so much debt issued that everything's on a precipice, and suddenly people will decide to worry about the event that just took place, that ordinarily 10 years prior, if it happened in 2016, 2017, nobody would worry about. But if we get some sort of event like that, which people will call a black swan, but it isn't a black swan, because you have to expect that sort of event as we go into 2026, 2027. Suddenly we'll all start worrying. And, if it's an event that takes place, again, I don't know what this is, but if it's a sort of an event that takes place where the United States, the Fed, suddenly, for some particular reason, cannot lower interest rates any further, if they, I don't know, if they, just going off the top of my head here, if they suddenly have to protect the dollar, if they suddenly have to protect government and suddenly have to raise rates, interest rates, you can see how that could be really catastrophic, right? So
Yes.
that's what sort of thing you look for.
Well, given your cycle view, does the large program of quantitative easing from the central banks, the printing impact does it impact on the expected correction of the size of the fall? Does it interfere with anything, all this printing of money?
Oh, yes. Well, the money, all that's happening really, if you can sort of see it from a land economist's point of view, all that's happening is we're printing money and creating credit so that people can buy land price people can buy land, or a house really is what people see, but it's the land underneath it. We're just printing all that money so that people can buy and exchange houses with one another at ever escalating prices. The merry-go-round stops at some point. We all know it stops at some point. Always try to get out before that happens.
Of course, of course. Look, is this cyclical fall unstoppable, or can the government central bank stop it? Can they step in?
The central bank is part of the system. The central bank is designed. Central banks now are designed to protect the system. They're doing that for the owners of government. So, and since they've got no understanding of economic rent and how it capitalises into a price, it's not in their remit well, their remit is to protect the system. So they're what you call endogenous to the system, which means they're within and part of the system. Greg, I could get into, I could say quite clearly that there's only two things that will stop the real estate cycle. One is a worldwide war, which doesn't stop the cycle; it just alters the timing, and that's probable. It's possible, not probable. It's possible that could happen. But remember, it's in the interests of all the governments around the world now. The people that get into government, they want to stay in power. It's in their interests to manufacture enemies. So the leader of China, he loves having America as an enemy, because any time the Chinese get a bit unstable, he brings out the bad old America. America need enemies because it keeps their military-industrial complex up and running. So, every now and then the US invents an enemy. Now they've just, they keep telling us about the damage that China will do and what it means for the world and blah, blah, blah. It's just keeping the system operational and functional, and the Fed operates within that. It's designed to protect the system. But I can tell you, at some point, property prices will go so high, they'll no longer be affordable by productive activity. And getting back to the original question, the only way that can stop, and when I say this, people don't like this, but if you can understand why land economics and what I talk about, if you can understand why this is no longer taught at university, you'll understand why we have to get a real estate cycle. It's as simple as that. And the only way this can be stopped is by the government collecting the rent by way of a citizen's dividend or instituting some sort of land tax like they do in Singapore. And Greg, like that's ever going to happen, right? I mean, it's that's right. Remember the Labor government here tried to bring in some sort of readjustment on the rent resources tax and things like that.
Yeah, on the tax deduction, and I think it was one of the big reasons they shot themselves right through the head. Yes. So I think
Greg, government, nowhere in the world is government interested in solving the world's problems. Government is the problem. It's not the solution. And whilst government exists like it is today, we are going to get a repeat of the system. Governments are dreadful. They are pathetic around the world. Politicians even worse. Don't get me started here. The way politicians are dealing with COVID-19 is an absolute utter disgrace, especially in Australia. It is profoundly stupid what they are doing. It's the solutions, what they're attempting to do, are now worse than the illness itself. Greg, I live in Jakarta, right? Jakarta's allegedly just had a just had some sort of epidemic. I'm sure all your listeners and viewers have probably seen what the government, what we were seeing in the press, and what all the journalists, and all the TV shows were attempting to show. Right? It's way overdone here. Yes, the only reason that you saw all those queues at hospitals in Jakarta was because the prior shutdown that they'd had, or at least the prior work from home sort of issue, which I think Indonesia's handled the crisis quite well, in my opinion, because they didn't shut down the economy. But land prices are so high here, and people earn such few wages, they can't afford much, right? So the people who were getting ill, and there's quite a number of them, they had to congregate around the health system and around government-run hospitals. They've been underfunded for decades, yes? I went to the doctor and dentist at the height of the epidemic. I went to the local hospital here. It's privately run, completely empty. There was nobody there, yes? So what you're seeing on the TV and the newspapers, which I show to all my subscribers of my service, what you're seeing is manufactured. You are not getting the full picture. It's designed to be emotional, yes? And this is how the cycle happens. Once you see the cycle for what it is, once you see that it's just the enclosure of the economic rent, it gives you an unbelievable ability to be able to see through the system, to see how stupid politicians are, to see how ridiculous government is, to see how the Reserve Bank simply prop up and maintain the system. And then you realise, you see through it, you can actually then start to take advantage of all the stuff that's happening around you. It gives you, I know I talk regularly with all my subscribers. They tell me constantly, Phil, I am so happy now that I understand how the system works and that I can see through this. It gives me such a fantastic ability to relax, to stop panicking like everybody else is, and to know what's going to happen next. Greg, I can't tell you how profoundly calming that is, to know that when everybody else is panicking in a stupid fashion, you've been able to see the year before, so you're positioned to take advantage of it. It's easy. It's not hard. You just have to understand what the rent is.
I can see if we go down that rabbit hole of COVID-19, we could be here all day, but I love it.
Yes, good. Yeah, we can't go down there. Don't get me started there.
We go down that rabbit hole, I'm going to get bitten.
Yeah. I don't want to belittle the circumstances. It's clearly difficult for some people. Don't let me understate. I'm not trying to say it's conspiracy. It isn't. I'm just saying, see the emotion for what it is. So, just let me clear that up.
Yes. Well, certainly what I am noticing in the world media is they're not very happy about anybody asking questions.
No, it's preposterous. So, Greg, you're seeing how that's the system. It's just going to go round like a merry-go-round. And I show people how to get off, so that they can see the system from outside the system. Let you take advantage of it then.
Let's come back to your cycle, because I'm fascinated what you said. You are a fascinating person, Phil, I've got to say. And you are saying that we're going to have this perhaps peak to 26, 27. How about the fall? How deep do you see the fall? Some economists are happy to have a bit of a swing at it with the word 40% and 50% and 60% and even 70%. And obviously what you're saying from your cycles, there will be an adjustment, and then the next cycle will be bigger than the last cycle.
Thank you for watching the interview with Greg Owen and Phil Anderson. My name is Cathy Stacey, and I work with Phil at Property Sharemarket Economics. Part 2 of this interview is coming up. The link to part 2 is just below in the description. And to get the full picture of what Phil is talking about, I really encourage that you watch part 2. Now, also below in the description, we have a special offer for you. If you'd like to hear from Phil on a regular basis in regards to the share market and the property market, the real estate cycle, you are very welcome to become a Property Sharemarket Economics member. And if you use the link below, we would love to gift you a copy of Phil's book, The Secret Life of Real Estate and Banking. So I hope to see you soon, and I hope you enjoy part 2.